Good morning, everybody. So there's another big Fed day watch. I thought I'd just show this site about Fed watch. 99% chance they're going to do nothing. So why the market pays attention to it? Well, who knows what he's going to say after he says, well, they say nothing. I kind of thought over the weekend, could that be a contrarian thing? A 99% chance he's going to do nothing. Maybe they're going to do something. I don't think so in this case, but there it is. I don't think it's ever been that certain that they're going to do absolutely nothing. But guess we'll just see what happens on Wednesday. So, yeah, exactly. This is what I'm saying. After what he says, everybody listens. Oh, whatever his views are on whatever economic numbers have come out to date, and everybody assimilates whatever's he's going to say, and then speculation begins all over again. So we're in that kind of moment. But last week's market action was bearish. Not that prices moved all that much, but it certainly looked like it was going to go up through this pivot high here. We all know we had this decline that started, that top in July, and had this move down to support. And it looked like maybe it could drop lower, and you could see our internal gauges got to an extreme down here. And we had a pretty good move off of the low at that time. And, the depth of that retracement, all 100% back up to that pivot high, while things could have went back down here, it's like, well, don't get too confident, in the bearish case. Even though you're coming into the beginning of September, they stepped up pretty much historically where buyers would. And last week we had that go nowhere. And then it was like, okay, look at this gap up, and strong close can go up through the high. And there were lots of patterns that supported a bias that it could go higher. And then the disappointment on Friday that fed on itself, and it was just a continuous selling all day long, which you can see held at the 20, and internals did nothing. But look, the VIX flipped up. And here's all, where I put these arrows, regardless of news that's out there, strikes and whatever. This was something that we've been talking about. If interest rates flip up here, and the dollar continues its march, and you can see the continuation pattern right there, that's going to be bearish for the markets. And you all have heard, oil has been marching higher, and it's got room to continue to move higher. So, these three factors, technicals, tell us be careful. Now, how ugly might it get or not? I don't know. I don't think it's going to get all that ugly, because we've got this trading range. You've got two levels of support here. And even if it breaks down here, the next level, that would be pretty big, I said, granted. But look, you got a decent level of support down here above 4,300, give or take. So let's see what happens in the coming days. We got this wide range bar on Friday. Not too much happening right now. Most days, as you know, is followed by either a range of contraction day or a day with a small candle body, something, like that. You can see some over here, things gapped up, but the range is contracted. So to think that there'll be some kind of range contraction or choppy price action today, or maybe, going into the Fed announcement, I think it's a reasonable bias. Now, treasuries, if they continue to move up, I think the dollar's down a little bit this morning. I think oil's up a little bit. So, we'll just see how things progress. The pound is still inching down. The euro, well, it gapped up a little bit, but that, it's coming down into the support area down here. So initial buyers beginning to step up a little bit. We have did I move that again? I'll type it in. You see down a little bit. Look at the run that the dollar's been having, and it's got room to go up. So any little weakness now, but unless we get some kind of a potent reversal, like a big nasty red bar or a big gap down, the trend is higher. And look at the red bar ignored. In the candlestick names, I don't know what that is. Dan and I show slides, and this one isn't on there, but call it whatever you want. It says it's going to go up. That's how we talk about patterns like this. Where you get a big red bar that says, hey, sellers took control, and it flips right back up again. Call it what you want. It's going to go up. Those, we look at whatever kind of patterns, it doesn't matter what it is. You get a big red bar and it gets negated. Call it whatever you want. It says it's going up, and now we got a big red bar down, and as this week goes, and today and tomorrow, our expectation is it comes down and tests some support, which isn't that far away. And I picked this part here because looking at intraday, there's this pivot down here and some congestion. Not that there's anything on the daily time frame, but that intraday, that is the next support level. The weekly is doing nothing, just consolidating after coming in and forming this buy setup. So we really don't, intermediate term, we just got to wait and see how things unfold. And I would say relative to how the oil is going up and the dollar's going up and interest rates that have been going up and starting to pick up a little momentum, in the face of all that, I think the markets, well, relative to the S&P 500 anyway, is holding up relatively well. The Q's holding up so far relatively well. But as we start looking around, which we do, and we see the transports having the decline that they do, while still not terrible on the weekly time frame, there's other weakness going on. And there's not that I have the time to get into everything else, but you start thinking about the intermarket relationships. And when we started talking about this a few months ago about the home builders, and you see the wild gyrations in those home building stocks, and then starting to move lower. If you noticed this topping pattern in Home Depot and that nasty drop that occurred on Friday. And so there's a lot of patterns, and we look a little broader, ETFs that have this topping pattern that's formed, and I don't think any of them have really broken that significant support, but patterns like this with a wide range bar gapping below a red bar and a range expansion suggest that they're going to. So whatever comes out of the Fed chair's mouth Wednesday afternoon could, if he has some negative comments about, hey, you know what, we don't like the progress so far, and we may have to such and such, that may drive prices lower. But we're going to be a wait and see, of course. SPX today. Let me just see if anything's moved a little bit from before. Look down a little bit. So we're right there at that pivot low on the other day, February 7th. Doesn't look right on SPX, SPY. Let me just double check that. Odd how that moved down. Gap. Here's what it is. Let me look at the futures. And so it should stop there momentarily anyway. All right. So this is pretty damn close. And so is that. So, well, we got support there. We'll just see if the numbers are still. It's a little too close for me, but that's the values there. It shouldn't go down there. Like if we're going to pick one or the other, what I would do is see if the market continues to drop and see if we can get some premium below 4,400. That would be more along the lines of my comfort level than being above it, since things are right here. So, let's see if it continues to drop a bit. And that would be the thing to do. Just keep an eye on it early on. And if they do, whatever the premium that's up here, it might seem more intuitive, just to go here since things are already down, which would probably be okay. Most days, if you follow the strikes that we look at, it's been a long time, very long time since prices have hit either. So either side has worked, but we always look at which one has the highest probability of not getting hit. So I just think that if prices could continue to drop, they're going to open here, they continue to drop here, that could be the no-brainer. And the premium up there would probably evaporate pretty darn quick if they did start to drop. Hues are right there at that pivot, and they've had that little bounce, a little bit of a climactic run on the 5-minute, even on the 15. And you could see right there, bounced off of there and didn't get very far. So can this be a W when it goes back up? Maybe. This came down that way. The lows are pretty close together. So it could get a little bit of a counter trend move, but I think it's just going to be choppy. The odds of get above here, I don't think so. So not a great setup to be considering a futures trade. S&P is pretty much the same, actually almost exactly the same pattern. Now this is a bit more attractive. It's got a void above. It came down hard. It's retesting. It's making a higher low. We got a bullish 180. And the thing here is, obviously this is not positive. The way that flipped down, I'm just looking at this from an intraday point of view, since could this become, so it's something we all got to keep in mind is that, are you a day trader? Are you a swing trader? So if you're a swing trader, clearly this red bar being ignored is not a positive. So you would be doing nothing, because the turnaround here suggested that this was going to go higher. That was Thursday. And then we all got, I don't know, fooled. I don't know, things just turned around. But if prices can clear these highs right here, and there's a void above, could this become what Dan calls a bear sandwich? Like, this market's crazy. Now we got the Fed thing and all of that. But if today's bar could become a green bar and close up near the high, you got to think it's going to go up. Now, I don't know that it's going to do that, but what I'm putting out there is, just because this is a green bar ignored in a red bar, and this sets up where it starts trending higher intraday, you shouldn't think that this, from a point of view of a day trading, that this can't go up, because it can. That's the whole idea about creating a void. And the concepts that we trade and teach are applicable in all time frames. So this is how what is in a higher time frame can be negated, right? So the idea of higher time frames suggests what's going to happen in lower time frames do apply. But in a scenario like this, it's possible that the lower time frame is where you're going to get the transition from red to green. Whereas over here, you got the transition from green to red, and then it collapsed. This was the void and the breakout failure. And then you know what happened on Friday. So this is interesting. And so you got to look at financials to see what's going on there. Right? They're down. So I don't know why the hell is it going up? Maybe oil stocks are going up. I don't know how much. That's really not doing much of anything. I don't know why it's going up other than futures speculation. Oil's up a little bit. Well, you got some stocks in there. So I don't know, Alex, if you got I mean, I'll just look at IWM and just see what's moving. So something's moving, and it's not regional banks, and it's not biotechs, which are primarily what's in there as far as small caps, a big bunch of them. So anyway, we'll figure it out. All right. I think gold moved up there. You know, didn't even get to the bottom of the range, maybe just because of the negative day. Just such a messy pattern. And silver, you know, close to the bottom of the range. These patterns just aren't that attractive. Gasoline continues to march higher. It's down a little bit here today. And crude oil. So it's close. It's almost to the top of the range there. But as this continues to go up, it's not a good thing for inflation. And I guess this might be, it'll be interesting what the Fed has to say about this, if he'll say anything, because they have that number, though. Let's exclude energy and food. That's what costs us all the most, right? And you know, when you walk out the door in the morning, what you might spend money on, excuse me, that the first thing, right? Not interest rates, and then maybe not so much, because whatever you're going to buy, you know, of course, relative to interest rates. But yeah, put money, gas in your tank, go to the grocery store. So last thing I'll look at and hand it over to Dan is just Bitcoin, kind of coming off of that breakdown failure there. And so maybe some of these Bitcoin stocks might do well today. All yours, Dan.
All right, good morning. Yeah, I noticed a bunch of Bitcoin things moving up too. Our riot alarm went off. That's a new trade idea. All right, just getting things lined up. Yeah, I think it's going to be boring here ahead of the Fed meeting. I personally am not expecting a big move. Just you know, it's the majority of the time it's going to be their commentary, obviously not the actual announcement, which Fed futures markets are pretty darn accurate in getting. Yeah, Alex, we stayed in Isla Morada last night on the way home, so I'll be heading back right at 11 o'clock for the afternoon session. So, you know, Greg was talking about this IWM. This is a fantastic example, yeah, of trading different time frames. Yeah, beautiful void here on the 15-minute chart. And it's another discussion which we had a lot of last week on things that we're getting that are potential double bottoms or continuation shorts. And this is a great example. Which way is this going to go? But right now, we don't know. We gotta wait for a decisive closing crack up or down, and then see what the other markets are doing, internals, etc. But like tan, right into the close on Friday. This was the one we had the discussion on. Is this a continuation pattern lower with a bear 1, 2, 3 on the weekly? It's a breakdown on the monthly. Or what if we were to gap down, 54.50 and then close at 58? Then there's my something potent reversal, and my bet's on the long side. But as of right now, yeah, daily, weekly, monthly are bearish. And a lot of the stocks in solar here are getting cracked. Look at Fizzler here. That's a nasty top on the monthly. That's a breakdown on the weekly. So Fizzler looks lower. Said G is in a death. Well, I use the word death trend to, suggest that it's going to zero. So I'll just call this a power trend, nasty power trend down. And you have zero knowledge at this time, but it's just interesting that this power downtrend happened right here from a 180 and a 123 at the converging MAs. That in retrospect turned out to be a grand slam entry. Wow, look at that. All right, so Ryan, bottom right. Here's another example. Is this a potential double bottom breakdown failure? Yeah, 1 second, Robert. Is this a potential breakdown failure, W bottom, or continuation lower? Well, guess what? I said over these tails, whatever it was, 1025, I think 1125 I wrote down. So I gave it extra room. I said I'm going on the long side. So I like this as a directional and a put spread, and they're in the weekend letters. Mara, let's see, I looked at Mara, looked at Hut. In the green room, we have something called the A/B test, same sector, they're both somewhat related, and we have a discussion on which one's better. And notice that Riot is substantially better than this one. I don't have time to get into all the reasons, but the pattern, the retracement, the moving average analysis, the price void, the pivot arrangement, etc. HUD wasn't bad, but Riot is still better. Now I know Mr. is not technically one of those three, but I always look at him. This could turn into a put spread maybe for Friday if it gets over Thursday's high. But look at the weekly's a bear flag, and the monthly's a breakout failure. And so, we just trade smaller time frames when that's the case. No, I would not call this a Climo, Robert. We want prices to accelerate and get far from the 20. So here was a Climo, yes. Here was another Climo, yes. Now it's too close to the 20 and it's not accelerating lower, far from the 20. Now it is not a Climo. It's a power nasty downtrend. All right, NVIDIA's are, when we did a call spread Friday, there's a lot of semis that got nasty crack yesterday, Friday. So that one's gapping down 10, 11 points, whatever. SMCIs, I said, look at that closing breakdown. This was on, that's in here somewhere. This was on my, I was hoping to get an inside bar today to have a 1, 2, 3, 4 tomorrow. But look, it's gapping down $10. But that's multiple time frame alignment there, daily, weekly, monthly. The only reason I didn't do it Friday was just this horizontal support. And I was hoping for 1, 2, 3. Hey, Roger. Jets ETF is still nasty. And as Greg was talking, I just saw Azul here going by the ticker. So Azul is an airline, Brazilian. Hey, actually, if you can change your drop down. So this is not a Climo. We do not call climb. Well, it was a Climo here, I would say. But now bearish price action, it's not, it hasn't accelerated from it, but look, gapping up to 850. So if that can take out a 30-minute high, it's a watch for, put spread maybe. All right, let's see what else. All right, this little guy I saw gapping up huge, 624, but it's gapping to a lot of resistance, no interest. ARM. I would want sides more. What does sides mean? Sideways, yeah, consolidation. All right, so ARM is this recent IPO on Thursday. There was an article in Barron's talking about, the high valuations, but it's a highly watched one, so I'll keep an eye on it for a pattern. SMH short. Yeah. I mean, this is, you got a gap to deal with. Now this one's down more. I really like that SMCI. I'm mad that it gapped down, but see now SMHs are at 145. So the problem is, Thomas, where's your entry and where's your stop? I mean, this started pre-market on Friday. Look at this igniting breakdown. Look at that power move, couldn't bounce, move down, small bounce into the close, but you still had a void lower. So yeah, we were very bearish on those stocks Friday. All right, MU got an upgrade. But because there's no pattern and it's a topping pattern at resistance with weak sector, my immediate thought on the bounce on the upgrade, my immediate thought, 30-minute low, call spread. Because things that then continue weak. All right, in this. All right, NSA alarm went off, but nothing to do. That was an early alarm. USB is a short. Let's wait 5-minute low. I don't like, because it gapped under it. Like that. So the Riot, we had a put spread. Riot is good to go if filled. The Riot, I also said, oh, actually I gave the same Riot put spread to both letters. So they're good to go if filled. Let me see what the numbers were. I'll give it to you. Actually, I posted it in the weekly by mistake first. I'm sorry, in the advisory letter. And I said, so what? Let them have it. They can have it too. Usually we do the shorter term ones in the weekly options trader and the longer dated credit spreads in the other one. All right, 10.5, 9. Apple up alarm was a put spread idea. All right, are we gonna, let's see. It's kind of, it's always a balancing act what these premiums are going to be on Monday. I'm actually going to try the $1 wide myself. Ozark alarm. Okay, Ozark was an early alarm. But that's on my short watch list. Looks good. BAC. Iridium, danger zone. Yeah, yep, you're absolutely right. IPG. IPG was a bear 1, 2, 3 short. Let's watch this to maybe do. Yeah, we'll do 5-minute low on this too. And then we had Charlie Golf. I had an early alarm, so that was a false alarm. Oh no, I had a low alarm. That's why I had an up and low alarm on Charlie Golf to see if maybe we get in earlier. Let me reset the alarm. Charlie Golf is over 33.63. That was a wide range igniting closing breakout, relative strength. And so I don't think it's going to trigger if the market wants to stay weak.